Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Happy to be back with you again today. I'm your host, Dr. Alan. I know you'll enjoy today's show, and I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. To leave a review and a rating, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either site, search for Real Estate Investing Abundance. Once you find us, leave both a review and a rating. Subscriptions are also vital to the show's success, so please be sure to subscribe on your favorite podcast app. It's free to subscribe, and you can unsubscribe at any time. Enlightened investors, today we have a show stocked full of financial wisdom as we take a look at a woman's worth, finding our financial confidence through the eyes of women. I'm your host, Dr. Alan. Are you perhaps a busy professional, fulfilled in the work of your calling, but you've come to the realization that developing financial independence has taken a backseat to the priorities of following your passion? If you can relate, you're not alone, as this is exactly where I found myself. But do not despair. I have great news for all of us. Keystone Capital is an investment company designed for passionate, fulfilled professionals like you and me to help us develop financial independence built on solid, passive real estate investments. We have created an investor circle where we can share enlightened information and give support so that all of us can develop financial freedom built on solid passive real estate investments. So go to our website, steedtucker.com, and enroll today. With us today is a powerhouse woman who, after 8 years in the banking industry, went on to become an investment advisor. She co-founded her company to collaborate with her clients in defining clear financial goals with realistic expectations to lay a solid foundation for financial success. She has passed the Financial Industry Regulatory Authorities Series 6, 63, and 65 exams and is a licensed insurance broker in 8 states. Welcome, Pam Prine.
Thank you, Doctor.
Well, we're glad to have you, Pam. Before we get into the depths of investing for financial success, take us back to your formative years and share a memorable experience that helped you to be the person you are today.
There will be a couple, but actually I grew up in Idaho on a farm. And so where I came from, the word stock meant cattle. So when a lot of people understand what I do and, the industry I have ended up in, they're, quite surprised. But grew up in a very traditional family. Money really wasn't an issue. It wasn't talked about. It wasn't secret, but it just wasn't anything discussed. And to me, it was like air. It was just there. Food was in the fridge, gas was in the gas tank by the corral, money was in the bank because mom had checks, and life was good. And it wasn't until I became older and got married that I realized that, wait a minute, we work to put money in the bank, then we have to budget this money, we have to make it last. And so growing up very comfortably wasn't really, it was great, but it wasn't really my best friend because I started learning my lessons when I got married, became responsible for earning my own money and really understanding how to pay bills and just how money worked. And so it's interesting that when I talk to people, I kind of take them back to their money story. What did your parents do for some of your first memories of money? And so in the formative years of mine, I was a little bit panicked and scared of money, realizing that it wasn't just like air, that there was a whole process to that. So, but it became a real interest in mine, and I wanted to be very successful with it. So that's a little bit of my background.
Well, interesting background. I never had thought of the connection between the stock market and the stockyard,
right?
But sometimes they kind of smell the same.
They do.
So I have been told that there are two drivers of the financial industry, and one is greed and the other is fear. And you have spent your career addressing the fears and particularly addressing the number one fears of women in their financial planning. So talk to us about finances and fears.
The number one fear that I have read in several books and as the other professionals I have worked with is a woman's number one fear when it comes to money is actually becoming a bad lady, being left desolate. And it's not just people who don't have an education or are comfortable with money. I actually have collaborated and worked with Eleanor Blaney, who wrote the book, A Woman's Worth Finding Your Financial Confidence. And Eleanor was the only woman in a very successful firm back east. And she was probably, I think, their top advisor and managed billions of dollars. But when it came time to being single for her and planning for her own future, she said she actually hired an advisor to advise someone of her stature because she became paralyzed in her thoughts. And even though she had substantial money, when it's your own, you become very emotional with it and sometimes paralyzed. And her fear was becoming a bad lady. And I was just fascinated by that. And so I thought, if someone like that has that fear, it's got to be more common than we think. And so women from whatever stature or stage of life, that is definitely one of their biggest fears, is becoming a bad lady, becoming desolate.
Well, I'm not sure that that's an unrealistic fear, even for very, very successful people, because it takes a long time to climb that ladder, but there can oftentimes be a cliff when you get to the top of that ladder. And
Right.
it's much easier to come down than it is to go up. So what are some of the ways and means that you help your clients to deal with these fears?
Well, I think one of the first ways is we provide a very comfortable place for them to ask questions, to get whatever level of education it is they want. And I know my sister won't mind if I share this, but as I was working with her, she said, Pam, I need you to talk it to me like I'm in kindergarten. I need to understand it from the basics. And I think a lot of people are afraid to be that bold in saying it's just not something I understand. So they go through meetings with an advisor or webinars or whatever it is, not understanding a lot, but just nodding their heads and then leaving feeling very frustrated. So we provide a place that we let people get to know us, to understand, hey, I grew up on a farm. I've been in the trenches. I've not been fed with a silver spoon, and letting understand them and feel us as humans, compassionate, caring people, and that they are free to share whatever their feelings are about money. So providing that comfortable education for them and simplifying the complex.
Well, you've been a roadblazer, an example for a lot of people in terms of appropriate investing and planning for financial success. But you spend a lot of your time focused up on women. So what do you see as the differences in terms of the psychology, the emotions between men and women?
I love talking about this because in general, we find that women and men think and feel very differently about money. One is not right or wrong. It's just that we have these different insights that we see it from. Men, I find, are very number driven. They're very competitive. They want to know the bottom line. What's my return? How much did I make? What benchmark? How did my investments compare to my benchmark? And just in life, they want to have the higher golf score than their buddy. They want to have a bigger engine. They want to be able to go faster. Their world is usually all about the numbers, where women are more likely to say, hey, Pam, am I going to be okay? Am I going to have enough money to last? Not interested so much in the money, but just, are they on the right path? Will I have enough money to remodel my kitchen? Will I be able to take my grandchildren on a cruise? Definitely more interested in those kind of results where they both lead to the same path, but generally our men are much more in the numbers and women are much more in the feel. Am I just going to be okay? I had a cute comparison here, an old aphorism. It says, a man will pay $2 for a $1 item he really wants. A woman will pay $1 for a $2 item she doesn't really want, but it's because it's a good deal. So we often deal with that. And when we meet with spouses, husband and wife, or whatever, quite often we will meet with them separately and then together so that we can understand their perspective and help them come to some kind of understanding where they're working jointly for the same purpose when it comes to their money.
We'll be right back after a word from our sponsor. As an industry-leading, relationship-focused, design-build construction firm, Mosaic Construction has worked in many different asset classes from multifamily to retail, medical, industrial, and commercial. Mosaic Construction works to execute interior and exterior renovations with their team of trades and project managers. Their experience with value-add improvements has resulted in increased ROI and long-term value of the assets. They work nationally in partnership with local trades to deliver thoughtful, problem-solving construction management solutions to all their clients. For a personal, no-obligation consultation, call Ira Singer, 773-491-3145, or email Ira at mosaicconstruction.net. You can also find Ira on LinkedIn. So it sounds like they really are working essentially for the same purpose, but from what I understand you, they are actually measuring it in two different ways.
Absolutely.
Where men are looking at those numbers, those quantifications, and kind of looking at that as, I guess you could say, as their trophy, as
Right.
their medal. And women are looking at it from, this is bringing not only me comfort and warmth, but it is doing the same thing for my loved ones.
Right.
And so it's just two kind of different ways of getting to the same thing. Even though those, I can see why you would want to meet with them separately, because even though those goals may be aligned and the same, it really is two different languages.
Right.
And I can see where the conflict could really arise, just not because they have two different aspirations, but because they're just speaking two different languages.
Right.
Yeah.
And another comment that we get a lot, and that women will confide of me, is that they have gone to an advisor as a couple, and the advisor sometimes just speaks more toward the man, and maybe it's because he or she feels like they are more comfortable with the language. But I actually had a friend share with me that she was sitting with an advisor, and she had a question, and her husband put up his hand and said, Ruby, don't ask. I've got this. We can talk about it when we get home. When she really wanted to feel like that she was being heard by her advisor and had that question. So, a lot of it is communication, and how comfortable do you feel communicating and not just nodding your head and pretending you understand.
Yeah, well, that seems to be a part of the culture. We negate women. We think we're very advanced and so inclusive these days, and yet there's holdovers from that Victorian period in terms of our culture and our practices.
It is getting better, and that's part of helping women take charge of their financial situation, because they are becoming more of a substantial breadwinner in the home. They find out that the average age for widowhood is 56. The average number of years that a woman could plan to be alone is 17. And so when they hear these figures, they realize I need to step up. I need to take a stand because I'm actually have a really good chance of being alone in my life with money. And sometimes that could be a scary scenario for them.
I did not realize 56 was the average age of widowhood.
I was surprised by that. Yeah. But I looked at my own situation. My oldest sister was a widow at 48. My next oldest sister was a widow at 59. My next oldest sister is still married, but has had a large financial responsibility during their life. And then there is my own situation, which I will save a little bit more towards the end of the program. So it's stunning to think.
Yeah. Well, taking on financial responsibilities that you had not been accustomed to is a difficult thing to do at any time in life. As you pointed out, when you first got married, you suddenly had to take on financial responsibilities that you had not necessarily been prepared for. But if you have not done that until you're 56, 57 years of age, that's got to be a major, major shock to a person.
It is. And adding to the grief or the trauma of whatever reason you become single, it just puts it in a whole different light and additional stress. A lot of times when people will come to us, couples, the man is very astute and very keen on investments, and he's done a great job of doing their investments. But I love the fact that he's concerned that if he happens to leave first, he wants to know that his wife has a relationship with a firm, with advisors that are going to take care of her in the way that he's comfortable with, and that someone that she has a relationship with. So a lot of times they will give us just a part of their investments so that he can maybe try us out, but so that they do have that relationship, so that he is not worried that when he chooses not to or is no longer able to do their investments, that she already has a soft place to land.
So even men are concerned about relationships.
Yes,
there are
some great ones.
That is encouraging to know. Well, what do you find are the major financial mistakes that investors make, and how do you help them come to terms with those mistakes?
Great, I'd love to share that. And many times we're talking about 5 mistakes they can make in a transition. Maybe it's in a job transition, maybe it's an untimely death or an untimely divorce, whatever it is. But rushing too fast to make mistakes is one decision that they make, particularly with death. I remember when my mom passed away at the funeral home, and this was several years ago, 40 years ago, but at the funeral home, we were given the advice, don't let your dad make any major financial decisions for at least a couple of years, or don't have him make any changes. So sometimes immediate financial decisions need to be made, but as a whole, whatever the situation, let the dust settle before you make a major financial decision that is made with all the emotion and the grief and the turmoil. Another one that particularly women make is they become very vulnerable and they fall prey to the wolves or the scams that might be out there. And people, can access records and such to different things that have happened to people. And they are very skilled in taking advantage of people who might be vulnerable. So falling prey to wolves who are out there is another mistake that they can make. Again, maybe making housing decisions too soon. Again, just kind of let the dust settle. And particularly when a lot of the people that are listening might be involved in real estate, any kind of knee-jerk reaction that you have when you are in a transition, try to hold off, try to have someone there, an advisor with you who you trust, who can think clearly, who can take the emotion out of decisions that you might be making. A lot of people, and number 4 is they avoid reality. They just want to stick their head in the sand, pretend that nothing has happened, and try to go on as normal. And I think adjusting to our new normal is something that people have an issue with. And what is normal? Normal is temporary. And we are all, even through this COVID situation, we are now adjusting to what is the new normal. What is the real estate market like, right at this time? Do you remember, how it has ebbs and flows and changes? So what is our normal now? What might our new normal be? And this last one, number 5 particularly, is women are vulnerable to this, is becoming a purse for others. Sometimes through a transition, a woman comes into money, inheritance, and other people find out about it, and they prey on women's generosity. As a whole, I think we're always thinking of others. We're always wanting to take care of those around us. And I tell people this a lot. 2 of the biggest threats to your retirement are adult children and long-term care. And you need to be prepared to take care of you. And I'd say to those adult children and anyone around someone who has a substantial amount of money, their number one focus is to take care of themselves so you don't have to take care of them. But preying on a woman's purse that she might have and her vulnerability, Mom, can you help us do this? Mom, can you help us? Or Dad, whatever it might be. People need to be careful and not let that generosity, their character that they have in wanting to help others, damage their own future.
We'll be right back after a word from our sponsor.
Would you ever invest all your money in a single stock? Very unlikely. Yet investors are willing to risk $50,000 to $100,000 in a single property in real estate all the time. Avestor is the world's first customizable real estate investment platform. Investors can build their own custom portfolio selecting investments across multiple asset classes such as single-family homes, multifamily, student housing, self-storage, and shopping centers. You can also invest across multiple markets and different time frames. Avestor also enables other real estate entrepreneurs and syndicators to build and use Avestor's infrastructure and cloud platform to create their own customizable real estate funds. To learn more, visit us at avestorinc.com. Avestor, real estate investing made simple.
Well, thank you for summing that up. Those are 5 very good suggestions there. And I have found myself in all 5 of those situations in various different times in my life. It is very easy for all of us, and I can see why in particular it could be very difficult for women. It's hard enough for men to pass through these transitional points. It's very easy to move too fast, and particularly when you're in a transitional period and you want to get things done. And when you're moving too fast, you're making mistakes and you're just not looking at all of the things there and falling prey to predators. As I started out, the 2 things that drive the financial markets are greed and fear. And those predators don't just prey on our fears, they also prey on our greed. And they know how to do that, and they know how to use both of those things there.
They are good at it.
Yes. And as a realtor, I have worked with a number of people who have passed through a death, a divorce, or something, and the first thing they want to do is make a housing decision. And I don't know how many times I've tried to talk them out of that, and they just want to move forward.
Mm-hmm.
Yeah. And they just want to move forward. And I'm afraid oftentimes they end up regretting that. So avoiding reality, oh my gosh, isn't it easy to just put our head in the sand and disregard that? And having children and adult children, oh my gosh. I know how that pulls at your heartstrings, for sure. So yes, thanks for sharing those. Well, how do people go about finding a qualified financial advisor who they can trust to actually be there to look out for their good rather than to be there looking out for their commission?
That's a great question. We tell people that there's a lot of different ways that people look for an advisor. Some of them like the brand name, the firms at Schwab, Merrill Lynch, all those that you're familiar with. Other people, they want lots of initials behind them. They think that is very important. And those initials are great, but they may or may not really have much meaning to them. One of the things that we encourage people to do is to find someone who is a fiduciary, who has that fiduciary obligation, the license. And actually, it's a 65 or a 66. My business partner and I, Kim, both have those licenses. And that simply means that we are obligated by holding that license to put our clients' needs above our own, and that they can expect a higher standard of care. And I find that a bit troubling that in the industry of financial advisor that you need a license to obligate you to that standard of care. But we have it, and that's what we would want to do anyway. But someone who is going to put your needs above their commissions or what they make. So that's really important. I think it's how you feel when you meet with them. Are you comfortable? Do you understand how they charge, how they get paid. Are they willing to educate you? Do they want to answer your questions? Do you feel like they really understand you and your goals and where you want to go? So they need competence, they need courage, and they need a good background and an understanding, but you need a chemistry with them and a comfortable feeling that the people we work with, they call us for everything. Hey, Pam, do you think it's a good idea that we purchase this home at this time? Or do you think that it's a good idea to buy or lease a car? Or do you have a referral source for estate planning? Whatever it is, I think the value that an advisor can provide that's beyond what goes on in their office is how are they connected? What kind of quality people can they contribute to your relationship to add value to what they do? And so I think those are very important ways. It's just a chemistry you've got to feel. And also, I would check them out on Broker Check. There's at finra.org, there is a broker check that you can just go in and enter their name and that you can see their work history. Unfortunately, we aren't allowed to have testimonials that, oh, they're a great advisor, they do this and that. But you can see if they've had any complaints and any disciplinary action. And so I think those are things that you can look for and get a feel. Use your gut. We've got that for a reason, and we know. And sometimes when people come in to work with us, we don't take everybody because we've got to feel, first of all, that we can improve their situation. And second of all, that they are in line with us and we with them. And sometimes we just know that we're not going to be a fit for certain people.
Just for our viewers and listeners that aren't not familiar with FINRA, FINRA is a national organization that the whole purpose of the organization is the regulation of financial advisors and brokers. And it is an organization that it's voluntary. Not all financial advisors have to be a part of it. The SEC does not require participation in it. And from what I understand, most financial advisors are not part of FINRA. So it really is an exclusive organization and its whole purpose is regulation. Is that right, Pam?
Yes. There's a lot of people who are going to the investment advice assets under management only, and they are kind of steering away from the broker dealer. And they're both very good, but we find value in still having a relationship with the broker dealer and being involved with FINRA.
Yeah. Sounds like a worthwhile organization and a good thing for people who are looking for advisors to look into. And if they are not a member of FINRA, that might raise a huge question in terms of whether that's an appropriate person to be working with or not. Well, tell us how we get started.
The first thing you do to get started is to start. It's something that people put off a lot. They procrastinate. And I often ask people if I'm doing a class with them, I said, what's the biggest nation in the entire world? What is the biggest nation? And often I get China, India, whatever. But I tell them the answer to that is procrastination. And so many of us are, we are residents of that nation of procrastination. So you need to start. You need to communicate. You need to begin communicating and get your information and to understand yourself and to understand your situation. And it might be as simple as writing down a budget, writing down what your assets are, getting a net worth and a income and expense, a budget written down. This is where I am. This is what I have. How do I move forward? There are so many educational tools out there now. There are podcasts and webinars. A great place to get started is on our website because we do have many educational tools there, podcasts and webinars on many different topics, and just take advantage of what's available to you. I actually started in an investment club back in the early 90s. I wasn't in the industry yet. And I remember going to a library and opening a book this thick. And that was where we would look up our stock information for that, little investment club we were in. And now you can just type in and there's just a plethora of education out there. But taking the advantage of that. The one thing you do need to be careful is just because it's on the internet doesn't mean that it's true. So there's information and there's good information and not as good information. But I think just getting started and then finding somebody that you are comfortable working with. So you have that non-emotional person working on your behalf. A lot of people think that they need a certain amount of money before they work with an advisor, or it's too expensive to work with an advisor. But advisors go much beyond the basis points that might be charged or the commission. They add value in all areas of your life. So reach out, be willing to communicate, and just get started.
Enlightened investors will be right back after this important announcement. I have a big ask that will only take a moment of your time. Ratings and reviews are the lifeblood of our podcast. So to leave a review, iPhone or other Apple iOS device users, go to Apple Podcasts or iTunes. For all you non-Apple device users, go to podchasers.com. On either platform, search for Real Estate Investing Abundance. Once found, please leave a review and a rating. Subscriptions are also vital to our show's success, so please be sure to subscribe on your favorite podcast app. It is free to subscribe, and you can unsubscribe at any time. So Pam's website is Keystone Group, AZ for Arizona.com. So that is KEYSTONEGROUPAZ.com. And if you go to Pam's website, she has some things there for you. 10 steps to empower investors, and also a pamphlet on the roadmap to retirement. Both of those are free. So go there, check those out, and connect with Pam. Well, Pam, let's go into the last part of our show here. And if you would share with us one of the most difficult setbacks in your life, and how did you come through that time, and what did you learn from it?
Okay, this would go back to when I was probably 48 years old, was working in the industry. It was a very comfortable time for me. My husband had worked at Palo Verde, the nuclear plant here in Arizona, and our children were getting older. We had like a 5-year plan for retirement. And to make a long story short, we were blindsided with some news one day that my husband was diagnosed with multiple sclerosis, and he would no longer be able to work. And that decision was made over a certain, a time period. I'm just condensing the information. But that is something that, again, we were blindsided with. That was totally unexpected. And all I could think of was not him, not this, and not now. So going from a comfortable situation to, gosh, what's this going to look like for us? And even though I was working was an option for me. It didn't matter, if I worked or not, life was going to be fine. And so I was comfortable with that. But then all of a sudden it's like, okay, now you're going to step up in a time where you thought would be a little bit easier in life, and you are going to be, and I don't want to say burdened, but you're going to be shouldered with more of a financial responsibility moving forward. You're going to also have an emotional, a caretaking, a lot of different roles that are going to be put onto your shoulders at this time in your life that we weren't expecting. And I think that's one of the things that people find with me that make me very approachable is I have walked the walk. I'm not just talking the talk. So I understand what it's like when life brings some unexpected challenges to you. And it was interesting because some clients that came in said that they actually chose us as a firm because of my experience with that, because they were experiencing the same thing in their family. And they thought that my understanding would be very, very helpful in planning them. So we have been blessed in so many ways. We have come through that, but that really was breathtaking, gut-wrenching, unexpected for me. But I really feel like it has made me a stronger, better advisor, and in helping and having empathy for these transitions that people go through in their life. So, and again, it's very relatable. I feel like that's one of the things that Kim and myself is we're not just stiff suits in a very sterile office that's kind of uncomfortable. So I feel like sometimes people would rather have a root canal then come and see a financial advisor. And that we are not like that. We make it very comfortable. We're very real. We're very approachable. And we have lived what we're what we're helping people overcome and be successful with.
Yeah, we like to plan and we like to think we have our life all laid out for us. But I think the one thing we can really count on in life is that life is going to throw us a curveball or
Absolutely.
two. And it just seems we're never prepared for that for some reason or the other.
Right.
Well, Pam, you are a board director of the Sierra Winds Retirement Community, and
serve on the board. Mm-hmm.
And you are also a part of the Dementia Friendly America initiative. So these clearly are things that are close to your heart. So tell us about what's going on with you and your involvement in those things.
Well, it's a privilege to serve on the board of directors with Sierra Winds. It's an independent and assisted living retirement community. And being able to serve, I love being out in the community and serving and help there with suggestions and just learning more and being involved with those people that we help financially in retirement, and to be able to see what they live with in their community and what's available and how we as advisors can help people prepare for that stage of their life. I think it's invaluable. And I am very excited to have been asked to be on the Dementia Friendly Initiative for Glendale, Arizona. I understand it's a national organization and different cities become educated and get a committee ready to make that a dementia-friendly community. Because as I've seen my clients struggle with that and their families, to be able to be out there and give financial wisdom and advice of how to look out for that, what families need to do to prepare and just help them. And again, being involved in the community to help the community become more aware and be able to be a dementia-friendly community. Those things are dear to my heart and very important.
Well, it's very interesting how you have combined your passions with your career and how the two have come so seamlessly together there. Yeah, it's nice to see that. Well, Pam, for my last question, imagine that you have come to the end of your life, and as you lay on your deathbed, what do you look back on as your greatest fulfillment and satisfaction?
In addition to helping people retire successfully, I don't think there's any greater joy than sitting around doing that planning and seeing it come to fruition and seeing the light in people's eyes and heart. We can do this. We're going to be okay. Thank you so much for setting that up. That is just beyond rewarding. And some people say, why would you want to be a financial advisor in this kind of market, in this kind of situation? But the success that we are able to help people attain is just their success is our success. So having that. And then I think that my other thing that I would be thinking of is being a role model for my children and my grandchildren and being able to leave a legacy for them, not necessarily a lottery, but a legacy of hard work, of values, of the importance of families, the importance of work ethic, all of those kind of things in leaving them in a better situation and wanting them to carry on those same values and things in their life, is leaving that kind of legacy. We often talk to people in their estate planning. Okay, the money is one part of it, but what is it that you are really leaving your children that will change their life and help them? So being part of that and having my own family and working through that, and again, just being a role model for them, I think is just, I couldn't ask for any more.
Sounds like a wonderful life. Thank you for being on the show, Pam. It's been a pleasure.
It was my pleasure. I appreciate you bringing advisors and different information out to people, because I always say, as I'm working with people, I think it's so important to connect. Whether it's a connection with Keystone, it's connection with who we might be connected to that adds value to you. But I tell people you are one connection away from something incredible.
Yes, indeed. Thank you, Pam.
My pleasure.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steve Talker Capital, a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.